What's up, clan? Island Trader FX here, back with another one. I hope the week was good. I hope the trading week was good. I hope you made some money. If you didn't, that's okay. That's completely fine. That is all part of trading. You win some, you lose some, but just ensure that you stay in the game. In today's video, what we're going to be talking about is emotional control, right? That is essentially what we're going to be talking about. And that is something that a lot of traders have issues with controlling their emotions. We tend to crash out for the smallest of things. When I say the smallest of things, referring to trading, right? Someone may have 5 wins, in a row, or they would have a week that is just fully profitable. Every trade they take would hit TP, right? But the following week would come around, and then you would take 2 losses, and you would want to crash out. You would start strategy hopping. You would try to tweak your strategy. You would do this, you would do that. However, you never paid attention to the fact that just last week you had a profitable week. You had 5 trades, 5 winners in a row. But one simple week where you get 1 or 2 losses, it's in your mind. You cannot stop thinking about it. You want to go back into the market. And that is something that a lot of traders tend to deal with, right? Trading, in my opinion, is just, I would say, 20% strategy, right? 80% psychology. I would say that because I personally have gone through periods of times where, I want to crash out, especially when you're just starting off. When you're starting off, people tend to blow a lot of accounts, risking too much, just doing stuff that you should not be doing. And I have an example. And when that happened, I said to myself, if that was 3 or 2 years ago, I probably would have crashed out. I took a trade on gold. I'm going to put it up right here. It was actually a break even. It wasn't a loss, it was a break even. Very interesting trade. The reason why I said that is because, and I'm going to do a top-down analysis on that trade as well. The reason why I said that it was interesting is because I held this trade for 2 days, right? My trades, I'm not a scalper. My trades oftentimes take 2 or 3 days to hit. Yeah, you here and there you'll get one trade hitting in one day, but majority of the time it's 2 days. So I took a trade on gold. I did not put my TP at the internal liquidity, right? So if this is the high of the range and this is the low of the range, and price is currently within that range, if price were to retrace, it would create a low, right? That would kind of be internal liquidity, and anything outside of that would be external liquidity. So I didn't put my TP at the internal liquidity. I put my TP at the external liquidity. So I was going for, of course, my 4-hour close, which I always do. And like I mentioned, that trade took 2 days to play out. Me personally, anytime I see a trade playing around TP, and that's something that the market often does, it comes very close to TP, it dances up and down, up and down, up and down. It's not hitting TP. The spreads are just, TP is between the spreads. I don't play that game. Price is right there, I'm closing it. I want to ensure that mentally I'm good where trading is concerned. I don't need any mental scarring. So I held that trade for 2 days. On the second day, while I was sleeping, price would have came this close to TP. Not even, I would say, less than a peep close to TP, right? And when I woke up, I realized that price was reversing. It was a sell, by the way, on gold. Price was reversing. Price was pushing to the upside. I said to myself, man, damn, if I was up at the time, I would have closed it when it was around TP. The old shoulda, coulda, woulda. But the point is, I was not up. Later on during the day, price pushed up, like I mentioned, price pushed up a bit and then they pushed back down. I quickly checked my phone. That's why I noticed that they pushed back down. It was a 4-hour bullish candle to the upside. It actually pinned. It pinned, so you could see the wick and you could see the body of the candle. It came very close to TP as well, but not to the point where it was kind of dancing. So I said to myself, man, that is literally very close to TP. I have no doubt about it that in the next few hours it's gonna hit TP. I mean, I've seen it over and over and over again. Well, boy, was I wrong. Price reversed and price kept pushing up to the upside all the way until it closed me out at break even. At that point, when I saw that, I was so annoyed. I was so annoyed because I was coming off of three losers, right? Not big losers. When you sit down and you think of it, really and truly not big losers. When you put all of the losers together, it came to about 1.25%, not even 1.5%. So I risked 0.5% on the first trade, 0.5% on the second, and 0.25% on the third. But essentially, that gold trade was supposed to cover all of that and still put me in profit, right? And this is essentially what I was hoping for. And when I saw that trade reversed, I felt the old me kind of started creeping up where psychology is concerned. I opened the chart, I looked at it, I was like, damn, that reverse. I closed MT5, I reopened it, I started flipping through different pairs, you know, wondering, okay, where can I get another execution? Where can I, you it's like you're on drugs and you really, something didn't play out and you really want it to play out. So in a sense, it's almost like revenge trading, right? And I found myself going through different pairs, trying to see where I could get an opportunity for me to execute a trade to try to hit TP. And that in itself is borderline crashing out. Going through different pairs, not doing a full top down analysis, just looking for something that would say, oh, well, price is bullish, or hey, price is bearish, let me enter. And these are the things that we have to pay close attention to, right? You have to know yourself. And if in the past I didn't make those mistakes, I wouldn't realize that, hey, I'm basically on the brim of crashing out and doing something crazy. I think a lot of people could agree that it only took them one trade for them to crash out. Right? You take a loss, and for some reason that loss hit you hard. Maybe it was a case where you over risk, right? So instead of risking 0.5%, you ended up risking 3% on that trade. And in your mind, you're saying this is an A plus trade. Price has to hit TP. And then guess what? Price hit stop loss, and now you're devastated. You want that money back because you were not comfortable with the risk. And now you enter again, this time with 6% because you want to cover the loss of 3% and you still want to make the 3%. And guess what? You took another loss. And when you check yourself, half your account is gone and you say like, man, half my account is already gone. So I might as well go ahead and risk the rest of the account to see if I could make the half back. And then guess what? It doesn't work out. Stop loss hits and then you've blown the account. A lot of us has gone through that cycle. And in order for you to break through that cycle, you have to know your cues. What is it that triggers you? You have to be able to pull yourself up mid mental breakdown, for lack of better terms. You have to be able to pull yourself up and say, hey, what I'm doing is going to mess up my entire trading plan. What I'm doing is going to mess up all of the results that I've built throughout the month, right? So you need to find things outside of trading. This is the only way that you're going to combat that. Something happened, you're pissed about it, you realize that you're pissed about it, you start getting thoughts about re-entering the market. Do something you like. If you like to work out, you go work out. You take that opportunity to go work out. If you like to play games, you're a gamer, you have your PS5 or whatever there is. Me personally, I'm not a gamer. You put your PS5 on, you play a game. If you like to read, you grab a book, you read. If you like to go for jogs, that's the key moment for you to go outside and take a jog. Because it's only after you would have done those activities that would essentially calm you down, that is the time you'd realize, man, I was really tripping over nothing. Say, man, I would have literally blown all of my progress just because of one loser. As human beings, we are highly emotional. That is the norm. However, if you want to survive in the realm of trading, you have to kill the emotion and be 100% mechanical. You need to have a system. When that system is in place, you need to understand, hey, if this does not work out, this is not the end of the world. You need to get up and continue with your life. And I just feel like this was something that I really need to speak about, because I know a lot of traders have gone through that. That is why you see a lot of people blowing their personal accounts, blowing their prop accounts, because in the moment you're just so upset about something that you cannot control. And that is one of the things. We want to dictate to the market what we want. No. You should be following the footsteps of the market, not dictating or placing your wheel on the market. It doesn't work that way. Because the moment you place your wheel on the market and it doesn't go in your favor, automatically those emotions start to flare up. But anyways, I hope you're able to get something from that. What we're going to do, we're just going to, I guess, do somewhat of a top down on that same gold trade. You could see for yourself, and then after, I'm going to take you to lunch with me. Ciao. Okay, now that we're on the chat, let's just get straight into it. Yeah, this time around, my face is not on the screen, but nevertheless, we'll still quickly just go through that trade. So the same gold trade that I was talking about. So this is how it played out. So essentially, what I was looking for is a bearish push to the downside from gold. As you can see right here, gold has been bearish, right? What you had right here is basically a sweep of a 4-hour high. You had gold dropping, right? Then gold reversed, made another sweep after gold created that sweep, going down to the 1-hour chart off of the 4-hour. This is what I noticed. After they swept this high, the same 4-hour high that we saw earlier on, we had gold expanding to the downside and creating a 1-hour fair value gap. And I'm just going to mark it off right here. Okay, and that is essentially all I needed for me to go ahead and execute on that trade. Okay, so after gold tapped into that fair value gap, after sweeping this high right here, I said, let me go ahead and execute. This is the internal liquidity that I first saw. I said to myself, let me just go for the external liquidity right here, which would have been this 4-hour close. This is all that I ever go for. You could see the purple line right here lines up perfectly with the 4-hour close. Let me just put it back to the candlestick. All right. So gold pushed big time to the downside, massive candle, massive bearish candle to the downside, of course, taking that internal liquidity right here. And then you could see a bit of a retracement, and then they push a second time, coming extremely close to that 4-hour close. Unfortunately, it did not do so. I already had price to break even right here, and we could see that goal push, it closed above, and seeing that goal, you know, pushed so hard to the point where they would have left a bullish fair value gap, that just told me all what I needed to know. But me personally, when I put my stop loss to break even or entry, that is me basically saying I would prefer for price to hit and put me break even than to miss out on a potential opportunity of gold somehow continue pushing down to the downside and hitting TP. But of course, that was pretty much it for the trade. It hit break even, did not lose on that trade. However, like I mentioned earlier on, just the mere fact that I would have stayed in that trade for 2 days would have kind of annoyed me. Hence the reason why, I felt like, okay, I need to go into the market and look for another opportunity, right? Emotions don't last forever. So you have to be able to identify when you're not in the right space and find something to do outside of trading to keep you from sabotaging yourself. But that's it for the trade. Let's go ahead and jump over to the next segment of the video. I'm going to be taking you to lunch with me. Let's go. Ciao.